let's turn our attention to latest stories from the energy market, from the Nigeria energy sector now. And let's start with the oil and gas stocks, you know, the ones we track here on the program. Starting with Forte Oil, the stock finished 0.46% in negative territory, ending at 238 naira. Of course, we know that the oil and gas stocks finished about 1.63% in negative territory. It didn't shed, or they didn't gain any, because of all the key oil stocks that lost yesterday. Mobil dropped as well. Owando is off about 4.95%, closing at 9 naira 41 kobo. Total finished yesterday's session at 146 naira 88 kobo. Seplat and Corn Oil also finished largely unchanged at 233 naira 4 kobo and 33 naira 28 kobo. So where is the market at the moment? From yesterday's session, daily return is in the negative by 1.6%. The year-to-date is at 17.6%, while price to earnings is about 7.6, mirroring the market's 8.4 number, and our dividend yield is also still unchanged at 2.8%. Let's take a look at some of the news in the oil sector now. The NNPC has cancelled crude oil delivery contracts to refineries. Now, it says that it took this step to ensure that there is transparency in the process, and has also entered into contract with about 7 other firms, including Owando, Sahara Energy, Carlson, MRS, Duke Oil, BP, Nigermed, and Total Trading, for them to bid for new offshore processing agreements. Now, the scrapping or the cancelling of crude oil delivery contracts to refineries is supposed to ensure that this is part of the firm's new measures, I beg your pardon, aimed at cost reduction and strengthening the operational efficiency across its value chain. Well, let's also talk about the fact that the demand for Nigeria's crude oil has dropped. It's facing a major decline of demand from Europe. Of course, they've got Ada Akonobi. She is a research analyst with the financial unit of Financial Derivatives Company Limited. She joins me now on the program to talk more about this. Ada, so let's start from what's in our papers, at least for this morning, just before we go to the broader market and talking about the global crude oil prices. Now, demand for Nigeria's crude oil has dropped. That's causing more than a few palpitations. Of course, we saw this coming, but having it stare us right in the face right now, it's a cause for worry. Yes, we know that the supply glut still it's going on. You have OPEC producers producing. I mean, a lot of countries now in the non-OPEC and OPEC region are all producing at record high to fight for market share. And if Nigeria comes into the market, and I know we are looking to export about 2.04 million barrels per day of oil in the October delivery. And unfortunately, this is coming at a time when most European and US companies are going into a maintenance season. So I would predict that the demand for oil then will drop because of this maintenance. So it is a really tough time. And we have Angola as well, you know, looking to increasing its oil output, Saudi Arabia increasing its oil output, Iraq, Iran. The market is really flooded with oil at the moment. Well, Nigeria plans to export a total of about 2.04 million barrels per day in October. It's supposed to be the highest level this year. But now with this maintenance coming up, it seems as if it's just going to be stagnant. It's going to just stay there. It's not really going to make any much impact. Well, we believe that we find buyers will probably have to find new techniques to see if we can, push this market out there and make it more attractive to the international market. So I should believe it will go out somehow. Okay, so now let's take a look at your analysis of the market. The Bloomberg Commodity Index declined about 0.83%, and we've seen Brent crude futures hovering between $43 per barrel, and as at this morning, about just before we came into the studio, about 44.77. For how long are we going to see that, especially with all this news coming up with Nigeria having so much supply and not having any customer to ship it out to, and then we're seeing the oversupply glut in the market?
I mean, I believe we all know what's happening in the oil market right now. The major story is supply glut, and now we have the impact of China. We know that China is the second largest economy in the world, and if China sneezes, the whole world shivers for some reason. So we know there's slow growth in China at the moment. And if Nigeria is looking to export this much oil, and if demand, because a lot of investors are scared or worried that the demand from China will significantly drop because of the slowdown in the economy, it is a tough time, and but I mean, we know that oil prices are declining, but we see them picking up this morning to about $44 per barrel, and this is because of the EIA report which came out that crude inventories in the US actually decreased as opposed to some analysts expecting it was going to increase. So it means that there's actually some sort of demand for crude in that region. So going forward, we feel that oil prices will likely hover around $40 per barrel, or maybe might touch $50 per barrel, because this supply, and a lot of analysts believe that a couple years back, a lot of projections have been made that global demand for this year was supposed to be this way, but global demand isn't picking up as much as most analysts expect, and that this is what's causing most of the problem. Looking forward, I believe that the Chinese economy, we see that they're doing there are so many measures they're trying to put in place to see if they can get their economy back on track. We know they've devalued their currency. We know they've cut interest rates. So looking forward, we believe that before the end of the third quarter and the beginning of the fourth quarter, the economy might pick up, and most emerging economies as well might pick up. Then subsequently, the demand for oil might pick up, so it might even out. But then we still believe it's going to be around $50 per barrel max. And a lot of economists have their own reviews and beliefs as well.
Yeah, but then you see, U.S. shale production, according to your analysis, has been resilient, averaging about 9.5 million barrels per day. So that's a lot that other oil-producing countries, including Nigeria, have to contend with.
Yes. The U.S. shale production, they are not going anywhere. They're looking to produce, and now they found new techniques, new techniques, and they're drilling at cheaper areas. So they're looking at, we understand that the U.S., they want to be a self-sufficient country. So I think their goal is to produce as much oil for themselves and not have to depend on importation from other countries. So this will actually cause a major problem in the economy.
Well, it's nothing to laugh about, but then it is what it is. Let's talk a little bit more about the agri-commodities. We see that the price of corn, the price of cocoa, let's start with cocoa now, has continued to, be in positive, selling at the current price at $3,094 per metric ton.
Yes. The problem now in the cocoa market is supply shortages from most West African countries, Ivory Coast and Ghana. We know that farmers in Ivory Coast are complaining about very little rainfall. I mean, they haven't had enough rainfall over the past couple months, although there was slight rains, but the rains experience isn't enough to cause any improvement in the crop output. And there's the fear of El Nino as well, although we might see the impact of El Nino in September, October. So generally, the cocoa production, the short supply shortage of cocoa is because of very, very little supply from Ivory Coast and Ghana.
We also produce cocoa here in Nigeria, and so when we have these conversations, I always wonder why we focus on Ivory Coast and the other countries, but not so much about Nigeria.
Well, we believe that I feel like we probably need to go and put out more, encourage more farmers in the region to see if we can be up to date with the technologies in cocoa production. We know there are a lot of aging trees. We know there are a lot of bad fertilizers. So if the farmers or the group in that region try and go back to the drawing board and see if they can try and compete with other major exporters, I'm sure things will get better.
But then, you know, FMCG companies are most likely to benefit from this sustained decline in global agri-commodity prices, don't you think?
FMCG companies are going to benefit from this decline. But however, FMCG companies in Nigeria, what is driving their stock prices or market share is not really what's happening in the global commodity market, as there's some sort of disconnection between what's happening out there and what's happening in the country. We know what's happening now. It's the general occurrence in the country, the depreciation of the depreciation of the naira and the general economic state of the country. But looking forward, if this goes on for, if there's subsequent decline in most agri-commodity prices, FMCG companies will begin to benefit from it, and if our economy picks up, of course.
But when you say begin to benefit from it, looking at the stock's performance for some of those FMCG companies that we've been talking about, Nestle, for instance, lost about 9.30% and is trading at 917 naira 69 kobo. Guinness has lost about 34.58%. Honeywell has lost 27.75%. Flour Mills lost 32.86%. And it's, you know, the losses are so much. And so when you begin to give that that positive outlook of having these companies pick up in the near term or in the short to medium term, if you'd like to put it that way, a lot of investors will be wondering how.
If these commodity prices if the decline is sustained, probably if it keeps declining for a longer period, and if the Nigerian economy picks up, if the naira strengthens, we might tend to see improvement in these share prices.
Okay, so I'd like to leave it at that. And of course, we've got you guys back again on our afternoon program, talking more about the commodities market. Thank you for coming on the program.
Thanks.